After the 2008 financial crisis, the British magazine The Economist wrote that sooner or later, society would return to normality again, but that this would be a new normality. That was a correct way to describe what was undoubtedly an enormous consequential shift in the course of world history. The past 15 years have seen turmoil and crisis on a global scale in many ways in unprecedented manners. The past week, we have gone through yet another decisive shift in world history. With the declaration of trade war on the whole world, Donald Trump has thrown the whole of the world economy into a deep turmoil. And what working class people and poor all over the world will realize is that the past 15 years of suffering, of crisis, of relentless pressure was only the beginning of the deepest crisis that capitalism has ever seen. My name is Hamid Alizadeh. I'm here today with Nicholas Albin Svensson, and this is Against the Stream. Nicholas, there's been a huge amount of things taking place.
Yep.
And people are wondering what's going on.
Yeah, well, I think it's quite clear that whatever stability that existed 6 months ago is now completely been thrown out the window, and we're facing a new situation which is even more turbulent than what we had 6 months or a year ago.
Yeah, I mean, last week Donald Trump on Liberation Day announced that's what he called it, Liberation Day. He announced his sweeping tariff on every country on the planet, a baseline 10% tariff on almost everyone, on almost all countries, imports from all countries, and a series of extra tariffs on countries with which the US has an imbalance in trade.
Yeah.
Now, we've listed all of these last week, but most importantly of all these were 54% total, 54% tariffs that Trump has now imposed on China, 20% on the EU, and 34% on Japan. Since then, the Chinese responded that they would add a retaliatory 34% tariffs on their part, to which Trump reacted. At the latest I've seen is an additional imposition of tariffs worth 104% of the goods that would be imported from China into the US. Together with the Biden era tariffs, that would take Chinese import tariffs up to 125%. The Chinese have retaliated again with another 50%, so they are imposing an 84% tariff on American goods.
Or even higher now.
Is it higher now? You have more up-to-date figures.
I think I had
than
something
me.
that they've added another bit on top of that.
There you go. Why not just add a little bit extra, bit extra cream in the coffee?
I think they might be up to 100, 120 themselves now.
There you go. Obviously, it's such astronomical levels that it would undoubtedly lead to more or less a drying up of trade, at least in significant trade between China, as long as these remain in place. Meanwhile, Trump has come out saying that all the other tariffs would be put on hold for 90 days, which means that countries that were previously seeing huge tariffs and devastating tariffs on the economies, countries which are not as well insulated as China, for now only have to live with the 10% extra tariff, right, which they seem to be quite happy about. This was obviously a response to how the markets were reacting, because we saw violent swings in the markets. Over the weekend, the American stock markets lost at least $5 trillion. Oil prices were collapsing, which indicated that people did not believe, that the market didn't believe that production would continue at the level that it has. Economic activity would decline. In other words, a recession would come. The dollar surprisingly, began to fall. Bond yields, i.e., interest rates for anyone wanting to take up loans in the form of bonds, was going up quite sharply, and so it's clear that Trump and there's lots of reports of the Trump administration being hounded down by Wall Street executives and industrialists and all sorts all sorts
It would
of
have
people.
been.
And he then he said, "Oh yeah, well we're gonna pause these retaliatory tariffs, the ones above the 10%, for 90 days, because in any case," he said, "more than 70 countries have lined up with Japan and the first in the queue to negotiate with America, without putting any retaliatory tariffs themselves." Just as an aside, he also tweeted 2 hours or a few hours before he announced this that now is the time to buy, and subsequently, the American stock market had their best day since 2001.
Yeah.
Incidentally, the last time that record was set was in the midst of a massive downturn during the .com bubble, where there was like a 1-day blip up before the markets crashed again. I don't know if that tells something about.
Well, they're looking down again. The futures for the U.S. stock exchange are looking.
There you have it.
Down.
These are the facts. How do you see this situation developing? Where's it going?
Well, I think it's quite clear which way Trump has been going, right?
Mm-hmm.
What he wants to do. He wants to get rid of the trade deficits. That's his plan, right? And not just trade deficits overall for the United States, but for every single country, which is where this plan of his came out from, the so-called retaliatory tariffs. It was just simply a mathematical calculation based on how big the trade deficit was with each country, which was then wound up in an absurd situation where he put a tariff on the U.S. military base in the what's it called, Indian Ocean, right? Or the Penguin Islands and so on, right?
Yeah.
Because it was just an arithmetic calculation, but behind it lies this idea that basically trade deficits are bad, and what we need to do is we want to remove all trade deficits, and this will bring back jobs to America, right? This is the line that he's pushing, and there's a logic. So all of his actions from that point of view follow that logic through. Yeah. And even if you say, well, now he's backtracked a little bit, but you're still looking at tariffs. Well, the market I think he proceeds empirically. He goes he tries something out and see if it works, see what the reaction is. And then if he doesn't like the reaction, then he'll backtrack a bit and then proceed on a different front or a different proposal and so on. And I think that's what happened here as well. Yeah. His advisors obviously say that, oh yeah, it was all part of a plan all along. He was always going to do this. Well, I don't think that's the case. Yeah. But you can still see that in this process, he's now shifted the goalpost. Because now they're all the market's really happy yesterday because it was only 10%. Yeah. Only 10% on the world, right? When they start off at 2%, he comes into office. Now they're at, if you include the Chinese tariffs, they're at 22%, or the China, Canada, and Mexico tariffs, which are still in place, right? Yeah. They're now 22% on average. So it's moved from, or 24%. So it's moved from 2% to 24% as a average tariffs on goods that are imported into the United States. Yes. And the markets are like, oh, that's a relief. Yeah. Because it's not 30 or 35. Yeah. And so this is the, in that sense, he's actually shifted the goalpost a lot. Yeah. In this.
You can say it's negotiation tactic.
Yeah, it doesn't change any of the economic fundamentals, but from the point of view of the markets, it's basically calm the markets down temporarily. Yes.
Although, as you say, economically, it doesn't change anything because I think you mentioned that the container trade is still massively depressed. There's no indication that container trade would actually change, which is an indication of how much trade would actually take place. So it might be that on the stock markets, there's a brief kind of relief, but it actually doesn't solve anything fundamentally, because what we're seeing is the biggest economy in the world, at the center of the world economy, basically taxing all trade, because most trade in the world, in one way or another, or a huge part of it, in one way or another, is connected to America and American interests.
So you have the container trades. Bookings apparently for the last week are down by 50%. And the US bookings to transport goods to the United States are down by 64%.
There you go.
I mean, this is obviously not going to continue exactly the same way, but because it's the immediate effect and everyone's worried and don't want to make any bookings right now.
Yeah.
But this gives an indication of the level of impact that this announcement had.
Yeah. Now, one of the things that, I mean, I was listening to this podcast this morning on my way to work. I think it's called The Manufacturer. No, it is called The Manufacturer. It's a manufacturing podcast by people who are engaged in manufacturing in one way or another. And the way they were describing it was basically that Trump is mad, he's a lunatic, and anyone with any brains would not have done any of this. And as soon as someone else comes back, this is what they literally said. They will just undo everything that he's done and everything will go back to how it was before. Now, I would object to that because, and I think we've explained this many times here on the podcast, on our website, marxist.com, in our documents. Trump obviously has his own way of doing things. And as you say, he's quite empirical and he acts in a very rash way. But we've explained this many times. The logic of the rise of protectionism is nothing new. It's a natural part of capitalism at a certain stage of its development. It's a natural part of the development of capitalism in essence, which at a certain point increases the pressure between the national capitalist classes of each nation who are competing on a world scale with each other. Now, there is an article in The Guardian from yesterday by Larry Elliott. It's called, "I've seen many phony trade wars come and go. This is the real thing." And I think he makes a lot of valid points. I don't know about his background, where he comes from, but I think he does actually get to the crux of this, that this is not just a Trump question. This is actually something that was brewing for a while. And he basically says, I've seen many people write about trade wars and so on. And trade war looms, trade war averted. And then he says, this time is different. The battle between the US and China, prompted by, we should just say, I don't know if we mentioned this, he did not take back the tariffs against China, all other countries. Larry Ellis says, the battle between the US and China prompted by Trump's tariffs is no pretend trade war. It's the real deal, and it will have real consequences. Tariffs will operate as a tax, adding to the cost of doing business and raising prices for consumers. Growth will slow and inflation rates will rise. The global economy was already growing only slowly. As things stand, is now heading for a recession. I think that's quite correctly observed.
That's what the oil price reflects, right? That's what the speculators think about the oil price. That's why it's going down.
Exactly.
It's because they think there's a recession coming.
Exactly. Incidentally, before Trump paused all of these extra tariffs, JP Morgan had raised their expectation of a global recession from 40 to 60%. Already we were heading towards a recession. And now Trump adds this hand grenade, I was about to say, but more like a nuclear bomb inside the machinery of world trade. But then he continues further down. He says, rather than the dawn of a new protectionist era, he says, the talk of the end of globalization is exaggerated. Rather, the dawn of a new protectionist era represents the end of a particular model of globalization, an imagined liberal nirvana in which all barriers to movement of goods, people, and money would be dismantled. This hyper-liberalized dream world has been on its way out ever since the global financial crisis of 2008. And all that was needed was a final shove, which Trump has just administered. From now on, migration will be restricted, supply chains will be shorter, hands-on industrial strategy will be back in favor, trade barriers will be removed only slowly. And he goes on to explain that actually what we had in the 90s was an exceptional period with America as the dominant superpower on the planet, the only remaining superpower. Soviet Union that was gone. There was no competition. The Americans could do whatever they wanted to. This was the height, it was the peak of the post-war breakdown of trade barriers, you can say. The removal of anyone who dared resist. Back then, America's desire to export and to penetrate different markets with their capital, with their goods, with their services, and so on. But capitalism has its own laws. And one of the things that happened was that in exporting all of this capital, the Americans built up industrial capacities in different parts of the world, most importantly in China. You saw the rapid development of China, which just at that point in time had moved towards capitalism. You saw Western investment rising in China with cheap labor. You could produce cheap goods to keep prices down for the Western consumers, for the Western working class. That was one of the elements of the way they bought social peace in that period, as we've explained many times. However, what you had at the same time was the development of indigenous capitalism, Chinese capitalism. Other nations became stronger. India also developed to a certain extent. Russia at that time was crushed, was in a very, very sad state. The Russian economy was falling apart, more or less. Since then, it's built up. And you see that, whereas at that time, America was a dominant economic, military, dominant force, capitalist force on the planet by far, today that relative strength has shifted. And you see the rise of other nations, which suddenly mean that they have their own interests that they're going to pursue, which are not necessarily in the interest of the American ruling class. And this is one of the elements which is pushing, which has increased the competition.
Yeah, when we talk about is China, it's like, because for about a decade or so, well, it's still today, but I mean, for a very long time, almost all the investments in new machinery, at least in new factories, new production, like a huge proportion, something like half, I can't remember the exact figure, was done in China. Mm-hmm. So when companies were developing new production lines and so on, at least in certain segments of the economy, like typically in assembly at that time, they were doing it in China. In particular, electronics industry, which obviously became this overwhelmed, like this industry which is now dominating other, has penetrated all other industries, right? Yeah. And a lot of that was focused in Southeast Asia, and then particularly then in China. Mm-hmm. And that's what built up China's industrial muscles, also in terms of steel and all the basic industries which were already there, but then could find an outlet and found markets for their product in order to supply for these new investments that were taking place. Yeah.
Yeah, I mean, just to give the figures for what you were saying, according to a recent UN report, in the early 2000s, high-income companies dominated global industrial production. That's the United States, Japan, and the European nations. The US was responsible for 1/4 of global manufacture value added, while Japan and Germany followed with 11% and 8%. In total, high-income countries accounted for 75% of global industrial output. This was in the early 2000s. China was responsible for just 6%. Today, China holds the greatest share of global manufacturing value added, with several sources estimating it controls between 26 and 30%. And they estimate that by 2030, if China continues to grow along the path that it is, which will also be in advanced technologies, it will increase its share to 45%. Meanwhile, the United States at the moment holds 11% of the global share. That's basic. That is a clear indication of the shift that's taking place between these countries.
If you're looking at the productivity and so on, which is like the most important, where it's like the the level of penetration of technologies. I mean, US and Europe are still ahead. Like what the workers produce in the US and Europe is much more. They produce much more value than they do in China, each worker. But that is changing, and the Chinese is catching up. And you can look at the statistics, for example, on industrial robots, only in the last few years. And I got it on
Well,
the side.
let's dive into that. We were going to touch this topic a bit later, but let's go into this now.
Like 470 robots per 10,000 employees is what China has now, which is to compare with Germany's 429 and Japan's 419. So you can see there that and China is consuming about half of new global industrial robots are installed in China. Quite a lot of which are actually now being produced in China as well. I mean, they're still importing. I think they're importing half of those from abroad, but half of them are now being produced in China itself. So this is obviously means that if they are the ones who are investing in all these new robots, it means that this development that you're talking about is going to be, it's going to be sped up, and it's going to become even more stark, the differences between China and the old industrial powers of Europe and the United States.
Yeah. There is an article in New York Times which is called "The Tsunami is Coming. China's global exports are just getting started." And it's quite interesting because it actually maps the development up until this present situation. Because we know that when the crisis in 2008 came about, what we saw was that the Western governments spent huge amounts of sums in cheap debts. Basically, they pushed all of this cheap debt into the world economy. We're gonna get to that. But global debt really exploded. But in reality, the Western countries had already very high levels of debt. But what we saw in China was China went from having barely any debt or very, very low levels of debt to massive amounts of 300. The total debt of China reached something like 350% of GDP. We're talking private, public, all of the shadow banking and so on and so forth. That in turn, what was that? That's when we saw the rise of these ghost cities. Millions of houses built that no one lived in, that no one, just through these state stimulus packages and projects, which just in the middle of nowhere would build these huge houses.
Speculative real estate boom.
Just completely burst. Exactly. And then a few years ago, we saw that beginning to burst. So serious danger signs. We saw the collapse of Evergrande, a major developer, which took a hit of about half a $1 trillion in assets. I think he had to write off, if I'm not mistaken. And well, we have to check those figures. I'm quoting from memory here. However, the Chinese back then intervened again. The Chinese state intervened with $1.9 trillion extra that they pushed into industrial lending, i.e. loans given to factories and industries to do what? To invest in machinery. Because what you had basically was they've built up all of these companies to build houses, and they had a huge overproduction of steel, of machine tools and all sorts of things that they didn't know what to do with. And so they pushed all of this into industry. They pushed all into industry that could what? That could export. That they could export to other countries. In other words, exporting the overproduction which is being built up inside of China into other countries. And this article gives a couple of examples. It says, for decades, the world's largest factory was Volkswagen's complex in Wolfsburg, Germany. But BYD, the Chinese electric car maker, is building 2 factories in China, each capable of producing twice as many cars as Wolfsburg. Recent data from China's central bank shows that the state-controlled banks lent an extra $1.9 trillion to industrial borrowers over the past 4 years. On the fringes of cities all over China, new factories are built day and night, and existing factories are being upgraded with robots and automation. That is now BYD is the world's biggest electric car maker. Obviously, electric cars is still a small part of the overall total sale of cars. However, you see the immense production capacity that is building, which immediately adds to what? The general global overproduction of cars. And that's what we see. We've seen in Germany, the Volkswagen and all of these German car manufacturers are in deep crisis. Why? Because of the massive overproduction in cars. In America, Trump actually back then, in his first term, put up so high tariffs that Chinese car makers couldn't come in, because otherwise their overproduction, overcapacity would be exported into the US and become a threat to American car manufacturers.
Obviously, well, it's a bit. I mean, the US basically has no electric car manufacturing industry other than Tesla.
Yeah.
So, and that's obviously and Tesla is being outcompeted by BYD in particular, but also the other Chinese electrical car manufacturers who are producing now cars which are as good or almost as good, but at half the price or something like that.
Yeah. But obviously, this is just one industry which doesn't really affect the American economy that much, or any other economy that much. But it is a very quickly expanding part of the industry. But the same situation actually exists in all other industries. Now, this is what the article says. China is using more factory robots than the rest of the world combined. And most of them are made in China by Chinese companies, although some components are still imported. After several years of rapid growth, overall installations of new factory equipment has already jumped another 18% this year alone. As new factories come online, China's exports are rapidly accelerating. They rose 13% in 2023 and then another 17% last year. Lending by state banks is also financing a boom of corporate research and development. Huawei, a conglomerate making items as varied as smartphones and auto parts, has just opened in Shanghai a research center for 35,000 engineers that has 10 times as much space for offices and labs as Google's headquarters in Mountain View, California. What's the effect of all of this on the world economy?
Well, what they're doing is, well, you said it. You're creating conditions for massive overproduction in a whole range of industries. I mean, steel is one of these examples. China produces, it's got more capacity to produce steel, more excess capacity to produce steel, I think is the figure, than the entirety of the European steel industry. So, and maybe even with the American one, I can't remember, but it's something like that. Like basically you have this massive excess capacity in the industries, which has to find an outlet. And now with the tariffs coming in, like China, and this is going to be, when Trump puts up these tariffs, so shutting off, and I think that we can assume that these tariffs will stay. There's not going to be an easy resolution to this conflict between, not going to find a beautiful deal, as Trump likes to call it, very quickly. But these tariffs are shutting then the Chinese product from the American market. So whereas already there was a concern, particularly in Europe, but I'm sure in lots of other countries as well, that Chinese products are flooding the market, undercutting domestic producers and so on. Now, obviously, with the US tariffs effectively blocking access to the American market for these products, that means that's going to be, that problem is going to be multiplied. So all these excess, all these products that are being produced in China from these new industries that are coming online, they're still, they're not even there yet. There's still already excess capacity. There's more industries coming online, more factories being built. Yeah. And where are they going to sell these vehicles? They can't sell them in the US. Sure, they're investing a bit, like the Chinese state. They're making some reforms, giving a bit of more trying to push people into consuming and so on, a bit more in China. But that's not sufficient. These going to have to find market elsewhere, in Europe, in India, and so on, in Russia as well.
Yeah.
And this is going to cause massive conflicts. Obviously, they have their own companies which are where they have their own companies producing the same thing. Like the Europeans probably not so bothered about the toy industry. They don't have much of a toy industry anymore. They don't have much of a textile industry anymore. They don't have much of a furniture industry anymore. They're probably not that bothered about excess capacity in those sectors, but in steel, in electronics, in machine tools, in parts, specialized industrial parts that form part of bigger things. All this is going to have a big impact on European producers and threaten their shares of markets in Europe, on the world market, but also even in Europe itself.
Yeah. China's factory output, according to this article, is bigger than the combined manufacturing of the United States, Germany, Japan, South Korea, and Britain. All of these put together. So they might not be as efficient per worker, but the totality of the output that they produce is bigger than all of these countries put together. And as you say, you see, there's a lot of talk about. There's a lot of relief. Okay, Trump is not imposing tariffs, that huge tariffs on everyone. It's just 10%. That's something people can live with. First of all, we can see, I think, from this that the rise of protectionism, and just like Larry Ellis tells us, is not something that Trump has come up with. The rise of protectionism was before that. In fact, Trump started by raising tariffs on China. Biden kept those tariffs, and in fact increased pressure on China, and also started a trade war against Europe with the Inflation Reduction Act, which is another tool, but a similar kind of way of attracting.
I mean, how do you remove the tariffs from electric car manufacturing now? Like Tesla, it cannot compete
exactly
on equal terms with a BYD, right?
Precisely.
Tesla's production lines are too small. I mean, maybe in a certain segment of the market they could, but in the mass consumer market they cannot compete.
Yeah.
And so the more these tariffs stay, the less competitive Tesla is going to become. BYD is going to be selling the cars on the world market, even if they shut out of Europe.
Yeah.
There's lots of the rest of the world which they can sell to. And they might even move some of the manufacturing into Europe and so on. And they can still use the advantages of scale. And they're going to be much more competitive than Tesla. And Tesla will survive on the basis that it's protected by these tariffs. But then as soon as the tariffs go, if they were to remove those tariffs, then Tesla would be wiped out immediately.
Yes.
Or reduced to a rump, like a kind of luxury car maker, Rover in Britain or Jaguar or something like that, right? And so the longer the tariff stayed, the more the Tesla will become uncompetitive on the world market. And therefore, it's very difficult to remove them once you put them in. And now Trump is doing that, but not just for the car industry, but for the whole of the economy.
Yeah.
So how can the next president then go in and say, oh yeah, we're going to pull those tariffs now, and therefore just suddenly you find yourself with the whole of your industry not being able to compete?
As we've said many times before, what these tariffs really represent is the dead end of American capitalism, that it can't produce its way out of this. The liberals always say, "Oh, capitalism is," or anyone who defends capitalism say, "Oh, capitalism it supports innovation, and that's what you don't have in a planned economy." But in reality, what we see is that this is a reflection of the declining productivity of American capitalism, and I mean there is a part also to be played by low wages in China, but in general, you see Chinese productivity showing massive growth, and American productivity, although it's still higher, much higher than European, still quite low in real terms. And quite productivity gains, I mean.
But it's like, where do the American multinationals go to make the best profits? right? Where do
Yeah.
they go to make the biggest profit?
Yeah.
Where do they invest, right?
Yeah.
China's a great place to invest.
Yeah.
So they were all investing there. They could maybe make some profits in the US, but it's harder to make profits in the US. You wouldn't make as big profits.
Yeah.
So you invest in China, make
Yeah.
much bigger profits. Why not?
Yeah.
This is the way the system works. It's the way that capitalism functions. And because the maturity or development of productive forces of industry in the United States, the limitations of the market and so on, it needed to spread. It needed to find new countries, new markets to open up and to spread to. And that's the natural development, because the productive forces are developing, they need to, they're constantly in movement and change. They can't stand still.
Yes.
And they needed to spread, and they found a way into China. And now, as we described, this is the effect of that process.
Yeah. And also, over the years, the declining rate of investment, because you see, we've seen lots of other parts of the economy. Well, it made more sense to invest and just live off, or not invest and live off of the old production lines you might have had, even if they were in the US, than to invest for what, And now with the support of the state now, with the state building, as you say, a massive barrier around these companies, they can allow to let go even more. They can allow to invest
even
less. Some of them might move some. I mean, I don't know if moving a factory is a huge thing.
They will move some.
But if they move something, that might be some initial investment. But in the long term, what it means is a lack of development, a lack of thing.
You should also can add to that ever since the 1980s,
Yeah.
the policy of the governments of Europe and United States have been to massively raise profits in order to raise investments, right? So they attack the working class savagely, I mean, not compared to what they're doing now, but there were attacks on the working class, on working conditions, on wages and so on. They were attacking the welfare state and so on, doing that since the early 1980s or even 70s, in order to raise profits so that the companies would invest. But the companies did not invest.
No.
Because because it's not as simple as that. You need to find a profitable place to invest in where you make sufficiently high profits.
Yeah.
And they found that in China. They did not find it in Europe and the United States, where the level of development was already at such a point that they couldn't find that profitable investments. And that's why we are where we are.
And incidentally, they found it in China because the wages were much lower, more than anything. But in reality, what we see that since the mid-70s, actual research and development and serious development of productivity gains has massively declined. It's more short-term research. Not that there's no research. Short-term research, more quick fixes, incremental increases, but not so many new industries, new fields, because why do that when you have a market?
In the sense they did it in China.
Yeah, exactly.
In so much of the world's economic development over the past since the late 90s have been taking place in China.
Yeah. And now that's become too big. That's the paradox of capitalism, that the more it develops, just as it develops to this enormous stage where China is now rapidly building millions and millions of robots. I don't know if you've seen they now have a proper robot industry with actual humanoid robots walking around. They say there's going to be hundreds of thousands of them by the next few years. Such great advances precipitates a collapse of the whole house, so to say. That is capitalism. Now, as we said, first of all, this process was already on its way. The crisis in the system in 2008 was briefly overcome by the massive injection of cheap credit, loans, and debts into the world economy. But it was clear that the post-war economic upswing had outplayed its peaked actually several decades before. And what we're now looking at was a general decline. And that was the main reason for that was lack of the development of the productive forces. Now, and therefore, this trade war was bound to happen one way or another, whether it was be trade war like this or other protectionist tit for tat measures, sooner or later it was going to take off and was going to accelerate. Now Trump has taken a step back, but as you said, the American market is the biggest consumer market in the world. Now China can diversify its markets, can raise the wages of its own workers. It can, make agreements with Indonesia and African countries and Southeast Asian countries in general. But it cannot make up for this giant hole that the American consumer market represents for Chinese goods, which is in the hundreds of billions of dollars per year. It's got to find somewhere. And what the bourgeois are saying now is that, well, it's limited how many massive flat screen TVs you can sell in Africa.
Yeah.
And this actually the biggest consumer market, if you want to see it as one market, is the EU and Europe is in populations wise is bigger than America.
And, but there's conflicts with them also, because if you think of flat screen TVs, they're not being produced in the EU, but they're being produced in South Korea. They're being produced in Japan.
Yeah.
So you got a conflict between those in the Southeast, which
Exactly.
there were already tense relations. Although now they had a meeting.
Yeah.
But there's already tension there. But I think with Europe, you got the car industry, where there was big tension, particularly on the electric vehicle side of it. And then it's a little bit unclear exactly. There's certainly about steel, but again, steel it's a limited industry.
Yeah.
Yeah, and there are already tariffs in place around that. But I think around machine tools and all these things, parts, components for advanced industrial components, like precision components, right? Like, parts of engines, these things, those kind of components were so key and important. I think that's probably which the Europeans traditionally have been very good at. That's where the Chinese now can find their way into and compete.
Yeah, they're edging their way in. And what does it mean? It means that all the pressures that were there before, from the rise of Chinese production, the need for China, the Chinese capitalism to look for markets to offload its overproduction, that's accelerated massively in the past few years. Now America is shutting off its consumer market for Chinese goods. And that will increase the pressure on every other country in the world. So if there was tension between the different economies before, now there's a lot more. And what you're going to see in Europe is, on the one hand, we're going to see rising prices. We'll get to that. We're going to see rising prices as an effect, as a result of all of this, these tariffs. Generally, rising prices on consumer goods and all goods around the world. And on the other hand, you're going to see the working class restive, under the pressure of inflation, angry, and the Western capitalism has to kind of balance this. Are we going to allow cheap goods to come to keep social tensions down? But that would mean closing down our own factories, whatever we make. If the Chinese, that's going to be shut. Or are we going to build a barrier for China and protect our own jobs and our own fact, but then see prices go up? And obviously, maybe some will vouch for one or the other. But in general, what we're going to see is that barriers will go up. Not to speak of the less advanced parts of the world are just going to see a flood of cheap Chinese goods coming in.
Yeah.
Or maybe American goods, who knows? But in any case, in between the clash between these two powers, they're gonna be crushed, and most of them are already teetering on the brink of recession. Huge amounts of global debt. We'll get to that. All of the economic pressures and contradictions which were building up in the system in the whole of the previous period is gonna be ramped up. The fire is gonna be. It's going to get a lot hotter. Let's put it like that. The hob is going to be turned up.
Well, you can see what the European industry or business is going to try to do. They're going to try to squeeze their workers harder.
Yeah.
And that's one of the consequences. Chinese conditions in Chinese wages in Europe. I mean, that will be that'll be on the top of the agenda. I mean, Mario Draghi, when he announced this thing. Oh, we need 750 billion per year to invest in European infrastructure and industry and energy production and so on. And said, if we don't get that, then what were we going to say? He said we're going to have we have to have cuts in the working conditions. We're going to have cuts in welfare state. Basically, European model is going to be finished, right? I mean, we had already seen all those things take place already, but he was like saying, yeah, it's going to get even worse, right? And it's obviously a threat to the workers, right?
Yeah.
Play ball, or it's going to get worse.
Accept what's coming.
And it was a threat to the capitalist in the sense of saying, if you don't come up with this money, and the government, sorry, if you don't come up with this money, then you're going to have massive social unrest.
Yeah.
And but the money hasn't come forward. And it's not going. I mean, now the Germans have come up with some of it, but it's only Germany, right? Germany cannot carry the whole of Europe. And so these, we say his problems, these conflicts that he identified is definitely going to come out. And now we have the trade war between US and China in the first instance, but also the trade war between US and Europe has only been postponed for 3 months. And they're going to negotiate. I mean, what comes out of that, we don't know. But basically, he's basing himself on the previous situation. Now it's getting even worse. And so all these contradictions are going to get much, much sharper between the classes in Europe as we're battling and struggling. The ruling class is trying to offload all these costs, all these burdens onto the European working class.
Yeah.
And the same goes for the United States as well.
Yeah.
Although Trump thinks it's not going to be the case, but it's most certainly going to be the case.
Yeah.
Inflation is going to hit, maybe not immediately in Europe, but it's definitely going to hit quickly in the United States.
Yes. We'll get back to that, but just before that, there is a talk, there is a general idea amongst a lot of people who subscribe to this new nationalist trend. People who support Trump, people who support Le Pen, people who support AfD in Germany. There's this idea that our problems is the lack of national independence, right? The problem is EU, the problem is globalization, the problem is all of these external factors, the world market interfering and intervening in our economies. And if we could just be, every nation be left to themselves, they could do a lot better. They could manage their own business and so on. And globalization is painted as this dark, evil monster. And of course, from a point of view of a lot of working class people, there is a rationale to this form of thinking because, I had this quote by Sean Fain. He says, because the liberals are saying, oh, you're ruining everything, and but then Sean Fain, the leader of the United Auto Workers, says, some economists are trying to scare anyone, saying that the cost of tariffs will be passed on to the working Americans, but the cost of NAFTA was passed on to the working Americans in the form of plant closures, deaths of despair, and economic devastation. Free trade isn't free, it's a disaster. And yeah, you can say that what has free trade meant for a lot of people in Europe? It's meant the moving of production to China, i.e. the European worker in many ways have been forced to compete against the Chinese worker, or workers of the Western Europe have been forced to compete against workers in Eastern Europe. And it has meant, in some places, deindustrialization, the moving of factories and so on. But at the same time, globalization has had a huge impact in and of itself. It was the basis of the whole of the past periods, one of the key fundamental pillars of the whole of the past period of 80 years of growth was globalization. And we brought a couple of examples for our listeners and viewers. First of all, there's this General Electric's jet engine, what's called the CFM.
CFM 56.
Sorry, I don't know why I've written CMFM here. CFM 56.
I had to lift this
Maybe
up
you can
before.
explain. This is a jet engine.
It's the most common jet engine for narrow body planes, which is the most common commercial aircraft.
So this is a fundamental part in all air travel, which is a fundamental key component in transportation in the world. Without it, world transportation.
This particular engine is the most commonly used, most popular.
Yeah.
And it gives, I think, it's a very complex thing as well. An engine has to be very precise. You don't want don't have any margins of error. It has to be very precise. You cannot, if you get it a millimeter wrong, you're destroying the engine and the plane will fall out of the sky, right? So everything is very precise. And there's lots of different moving parts. And all these parts are produced in different places, right? And even when you, in lots of different, I don't know how big the supply chain is, but even if you just go to the end of a process, the final, there's actually, this engine is produced in two locations. One is in the United States. This is an American company. One is produced in the United States, Avondale in Ohio, one of the plants, and the other one is Villaroche in France. But it's not like those two plants. Oh yeah, it's produced in that plant and in that plant. But actually they're producing separate parts of the engine.
Yeah, of course.
Which they then send to each other, right? So half the parts are produced in the US, half the parts in France, and they send them to each other, and then they assemble the final product in each place, right?
Yeah.
So the final assembly takes place in both places, but one plant couldn't exist without the other. They are dependent on each other.
Yeah.
And so the moment you introduce tariffs, right? You're saying, the 10% they might be able to swallow it, but if you put it on 20, 30, 40, 50%, then suddenly this engine, half the parts of this engine is going to be faced with a massive tariff in order just to feed into the other one.
Yeah.
And if you're trying to then, like Trump is suggesting, to move the factory, and this is just the final end of the process, there's all these other components which feed into that factory as well. Do you have to double up the factories, right? You have to produce these components of this engine has to be produced in two places. They have to have basically two factories in the United States and two factories in France, rather than just having one in each place.
And by the way, each one of those factories have probably dozens, if not hundreds, of smaller factories that exist in the nearby area with very specialized workforce, which is cultivated by that particular region. So the moving of we're talking the moving of whole industries or half industries.
Well,
from one
you have to
continent
double them as well, right? Because the European market still has to be supplied with engines. I presume that's why there is a factory in France in the first place. It's because there is a European market for this engine.
Yes.
Airbus uses this engine.
Yes.
The French-German, the European manufacturer Airbus, they use this engine in one of their most common models, right?
Yeah.
So there is a market there. So you have to then have two factories. Obviously, you're doubling the cost. You're reducing the efficiency, not quite doubling the cost, but you're reducing the efficiency of the production of this engine. And really and I think this is, if you look at what Trotsky had to say and so on about the tariffs in the 1930s, it's describing basically how the governments at that time were trying to put the genie back in the bottle, so to speak. Like the productive forces had developed that outgrown the limitation of a nation state. And this is what's happening here as well. You can see this, you have the whole of the world market for this one engine, right, which is most common, is supplied by two factories in the whole of the world, right? It's not like every country has their own engine manufacturers. And not just that, but it's actually only one factory that produces part of this engine in the whole world, for the whole of the world market, all the exports to Indonesia, to India, wherever, where this engine eventually wound up as part of some plane that's flying around. And it's all goes down to parts produced in one place in the world. And obviously that specialization is precisely part of development of productive forces, making them more efficient by eliminating the boundaries. And this is what globalization was, right? You remove these boundaries to allow the productive forces to develop in this way, to integrate the world market. And when Fein talks about NAFTA, the North American Free Trade Association, which built in the 90s, Clinton signed it and so on, that's what it did particularly for the US car industry, which merged these three countries, all the potential, the workforce and so on, these three countries merged together to create one workforce or one industry over those three countries, which then enable them to make it more specialized and more efficient, the production as a result.
Yeah.
And that's what then now Trump, when he's tariffs against against Canada and Mexico, is trying to unwind that.
Yeah.
But it's impossible. You've developed, it's only possible on the basis of basically trying to turn the clock back, right? Which you can't really do in capitalism. You can't basically destroying the industries or all these advances that have taken place in industry.
Yeah.
These new factors, I mean, to basically destroying that in order to kind of attempt to turn the clock back, which is impossible. You can't do that. Capitalism doesn't function in that way. You can't just like, right, okay, yeah, let's go back 50 years in economic development.
Yeah.
Because China is there, right? They're knocking on the door. They are not doing that because they are the new guys in town. They are the most capable, and they will be pushing. They will continue to push, and that essentially, at some point or another, will have an impact also in the United States. And there's no tariff, no law that can be produced by any government that can fundamentally alter the laws of motion of the capitalist economy.
Yeah, that's the point. That capitalism is a system that is lawful. It can't be controlled one way or another. And as it develops, we explained this in last week's episode, but as it develops, it starts as a national phenomenon, breaking down the barriers of the small city-states of feudal society in Europe back then, and uniting the whole nation, creating a national market. And that gives it a huge boost eventually. However, once it's saturated the natural markets, capital has a natural, impulsion to expand. It must expand constantly. And once it saturates the national market, it must expand beyond the nation in export of capital and for looking for markets for the sale of goods. That leads to the era of the world market. And the world market developed to such an extent in the capitalist world after World War II, because it was so dominated by American capitalism, that it essentially forced the whole world to lower their trade barriers. Before that, you had many countries with big trade barriers to protect their own industries against more competitive players. But with the tearing down of those barriers, with the setting up of the World Trade Organization, the whole of the liberal world order that was put in place, in essence. Yes, this was, on the one hand, it was very reactionary because it meant the domination of America, of the whole capitalist world, and after the fall of the Soviet Union, the whole world.
Yeah.
And American imperialism penetrated every single society, every country, every state, every economy, everywhere. Even where it was an enemy, it was, it had its interest and was trying to penetrate one way or the other. However, at the same time, that particular circumstance in world history did give rise to a massive economic development as well. And we saw through the development of the world market, just like the internal domestic market allowed for capital to accumulate on a high level, allowed capital to move from one part to another, from one industry to another according to the needs of the market, and to use the collective labor and creative power of the whole of the nation, of the whole of the working class of that nation. The same type of impulse was given to the development of capitalism by the development of the world market. In the post-war period, this took on rapidly, very like a world market on steroids compared to the world market in Marx's days, we can say. And after the collapse of the Soviet Union, the entrance of China into the world market, again, another massive boost. And yes, it enormously developed the productive forces. Like we see, these jet engines you talk about, I mean, these are fundamental pillars of the world economy. These are very, very important. And there are many of them in every single industry, in every area. We talked about ASML, which is the dominant producer of the most advanced lithography machines in the world, which is the machines you need to build microchips, essentially. Now, these machines cost $200 to $300 billion to buy. Million, sorry. That would be a lot. And you need at least 4 or 5 of them in a factory. And besides that, the factories to produce is incredibly expensive and very, very difficult to keep because they have extremely high restrictions. But these are the most complex and advanced machines in the world. And what they produce is absolutely necessary for the modern society that we have. The whole of global logistics, communication, modeling of everything from the weather to development projects to
microprocessors, right?
Exactly. Yeah. Everything you need for microprocessors, which the whole of our society is built on.
Yeah.
Without it, it would collapse. I mean, as we know it wouldn't collapse, but the world as we know it would not be able to exist. And the advances of humanity in every field, in medicine, in construction, in industry, wouldn't be as much as they are. Now, these machines, in fact, it's interesting. This company, ASML, is the only company that produces this advanced level of lithography machines.
The best lithography machines.
Yes, that can do
small scale
the smallest scale and the most advanced chips. There are other countries which can do smallest, a bit less advanced, but this is the one needed for the absolute top grade chips. It's a Dutch company. And it's interesting because they have hundreds of thousands of components, and they have thousands of subcontractors of producers of components, third-party suppliers. In other words, 90% of the parts are produced outside of ASML by companies all over the world, and in fact, to such an extent that this is what there's a report about this going into this company, and this is what they write. They write the most crucial element of an EUV lithography system wasn't and still isn't any individual component. So it's not that they made a machine. They make one machine. It's just one component. But here's the answer. He says, but ASML's expertise in supply chain management. So in fact, ASML is not a company that produces a machine. More than anything, they manage a supply chain. That is what we have. The highest development of technology by mankind, the most advanced tool that mankind has ever produced, has been produced solely on the basis of the global market. In fact, it is a direct reflection of the global market. These guys are not a factory. They're not producers. They're supply chain managers. That is essentially what they are.
Yeah, it says 5,000 suppliers, tier 1 suppliers. I don't know exactly what tier 1 versus tier 2 is. But
exactly.
I mean, let's say it's the most important suppliers, including, from the US, from Asia, from Europe,
all
Switzerland apparently buys the optics, there's a Swiss company that does the optics, but from all over the world, all different parts. And obviously in this machine, which produces nanometer level precision, right? Which is, what is it, a millionth of a something?
I'm not going to go into that.
So very, very small, but
extremely small.
Because in order to do that, you obviously need extremely precise instruments. So you couldn't have any mistakes in the production process, and this $100 million machine is going to be useless. So you got to have this, so they got to know, not just they got to know, work with their suppliers to produce these extremely precise parts, which are particularly some parts of the machine, I'm sure. In fact, this interesting quote here says, according to former executive vice president and chief strategy officer of ASML, Frits van Hout, ASML engineered this network of business relationships like a machine, creating a finely tuned system of thousands of companies capable of meeting its exacting requirements. So it's not just one precise machine, it's thousands of precise machines working seamlessly together. The achievement of that for humanity is enormous. And what we have now is, at the end of globalization, here is the irony. Again,
precisely because capitalism reaches this high level of development, because robotics and technology and manufacture and industry reaches the heights that it has, such as in places like China, the system goes into reverse. And it becomes, and it doesn't become a builder and a developer of the productive forces. It becomes a destroyer of productive forces.
Yeah.
Because now what we see is a world where every country, there will be pressure on every country to build up trade barriers, to protect jobs, now, Donald Trump is exporting unemployment from the US, but then the Europeans want to export unemployment from Europe, and so on and so forth. And therefore, these marvels of human ingenuity are going to be undermined.
Yeah. So you have a crisis of capitalism, which is a consequence precisely of all that's happened. So the development of free trade has produced this crisis.
Yes.
And like Sean Fain says, actually, free trade has created misery. But it's not just about NAFTA, it's about the whole thing. And it's also created these advanced productive forces, which now can no longer be contained within the capitalist system. And they're revolting against the capitalist system in a sense, right?
Yes.
But it's not just, and that then gives up, the misery that then the capitalists inflict on the workers in order to try to get out of the crisis one way or another, attacking their pensions or whatever it is. And then the workers, on the other hand, trying to find a way out. And Trump, clearly, there was a layer of the American working class who voted for Trump as a way of trying to find a way out. I mean, he I think he said the other day when he was talking about his tariffs, he said, I'm not the president of Wall Street, I'm the president of Main Street. And then started talking about workers, the American working class. Yeah. And this is the way, obviously, he's leaning on that layer, saying, look, what I'm going to do is I'm going to solve your problems with tariffs. This is not the first time in history this has happened. This is, goes right back to the 19th century when there were being bourgeois politicians trying to win working class support on the basis of talking about tariffs, protecting the industry through tariffs and so on. But it's never going to work. I mean, Engels describes, there's an article from 1880s where Engels talks about, he says, it's like a screw. It just, the more you screw it in, or like a wedge, like a wedge screw, something like that. But the more you do, you have to kind of keep screwing, and it gets worse. I prefer the analogy between quenching a thirst with salt water. Like the more you drink, the thirstier you get. Yeah. And that's the way protectionism works. And it's actually not going to provide any of the solutions, precisely because the industry has developed to this vast degree, and it cannot be contained within the nation state, even one as large as the United States or as large as China. Yeah. You cannot contain the industry. They need the parts and resources and this specialization, the division of labor, which has been developed over the past period. So you cannot solve it that way. But you can see it comes straight from the same thing. Like the development of free trade, the more they developed it, the more they create opportunities for development of industry, the more they then create the conditions precisely for what we're seeing now, which is the backlash, the hangover, so to speak, of the whole period.
Yeah, I mean, already we see, at some point this might stabilize momentarily, but already we see the industry in the US itself. Industry has developed to such an extent that you can't just move a factory in the course of a week or even 90 days. To set up a car factory, I was reading you sent me an interview with one of the managers, top directors of Ford, was saying, well, to develop a production line, we're talking between 4 and 10 years from planning, from idea to planning, development of a car, to then, it's not just about, getting the car, but it's also, who's going to deliver the screws and the upholstery the plastic for the panels and the wood and the software and the gears and there's the need for a whole underforest of subcontractors and factories and industries, which the modern production necessitates.
And if Trump, and he's creating uncertainty, so if you want to build a plant in the US, you're like, all right, where are you going to get components for? Sure, if you can find American suppliers for all of your parts, or the vast majority of them, but that's not very easy. There's some statistics about the China versus US. So apparently, out of these 20,000, was it Goldman Sachs? Was it? Yeah, they did a survey. They took 20,000 Chinese products. There's products they imported from China into the US, and they said 1/3 of them, China has 70% or more of the world market. Basically, they have a monopoly.
Yeah.
So to trying to wean yourself off, and this is just China. So out of 1/3 of these products, to try wean yourself off them, all of these products you'd have to find somewhere else from, which you cannot find in the US already, right?
Yeah.
And if you wanted to exclude Europe, Canada, Mexico as well, that makes it so much more difficult. How can you then plan to build that factory? Because you don't know any of the conditions, any of the terms of trade where you're going to get your supplies from. And that's why some for sure they might expand existing site and so on. They will make some adjustments for sure. I was reading there was one small manufacturer, they were talking about how they, like with sort of 20 employees supplying the outdoor industry, and they were talking about how they're going to expand one of their American sites to be able to solve this problem. But in general, on a wide scale, you cannot resolve the industry's problem on this basis.
And not only that, I mean, that's just the immediate negative aspects of this question, that you're going to find all sorts of bottlenecks and problems to overcome. But also, you cannot develop the productive forces as much as you have so far. So what we're saying is, a machine such as the ASML lithography machine, you can't build that anymore, because the expertise to develop such machinery and such technology doesn't exist in a single country. It can't exist. And therefore, with the world market gone, the idea of developing such things, this should just be the beginning. Let's say this should be the bottom level of a new level of technology that humanity can create. That's what this ASML machine should be. But in reality, it seems for now to be the peak within capitalism. Is the peak.
Yeah, but that's also because it's not just the one of tariff, like say the 10% or the 20% or whatever it might want to be. It's not just that, because each product is being sent across borders multiple times.
Yes.
And that's where you find the car industry as well, because of the NAFTA, right? They all thought of it as one market. So they were just like, well, let's build that plant on that side of the border, and this plant, that's this part of the process on that side of the border, get that supply from that. And they just switch it. So the beginning of the production process starts with maybe steel from, coal from somewhere and iron ore from somewhere. But anyway, let's say steel from Canada being exported into US, producing something, a part, which is then exported back to Canada, which is then once again modified and turned into something else back into the US.
Yes.
And obviously with these tariffs, every step of the way, you would face a tariff, particularly if they have tariffs on both sides of the border or in both countries. And so it's not just, it's just 10% on all the inputs. It's actually multiplied by every time you cross the border.
Yes.
And that's what created this particular multiplier effect, basically, where you then have 10,000 added to the cost of an American-produced vehicle, because it's not just the one crossing the border; it's multiple times.
Yes. Now, there is, when you read the mainstream media, you do see this outrage by the liberals. Trump is mad. He's a lunatic, and he's just tearing everything apart. And in a way, they're right. He's tearing apart a globalized world order, or let's put it like that. He's undermining the world market, which has severe effects on the world economy and for the whole of humanity. But as we just established, this was not Trump's making. This was a process already in the making. He just expressed it in a particularly acute or crude way, according to his thing. However, I do get very angry reading some of the nonsense that the liberals come up with, because they present themselves as the reasonable, rational, people. Oh, we're not as stupid as these guys, and we're not as crude as these guys. We know what we're doing. We had a plan. And to a certain extent, you might say, okay, that there's a point to it, that the liberal order was established over 80 years. They refined their methods, they refined their institutions, they have think tanks and committees, and also they wouldn't act as crudely as Trump. Trump is like, he's a rebel bourgeois carrying out a revolution inside the US establishment, and he's using very crude measures. These guys might be more refined in some ways. They might not spill their war plans in a signal group with some random journalist. But to say that they were acting in a rational manner is complete madness, because we just discussed the 2008 crisis, huge crisis, huge world economic crisis. What did they do to overcome that crisis? They flooded the world market with cheap debts, which means that, and again, they did it several times. I mean, they've done it throughout the whole period, since the year 2000, essentially. Every time there was the slightest hint at a recession or a downturn or a slowing down, just lower the interest rates. What was it Gordon Brown said? There's no more boom and bust. The business cycle is gone. We've tamed capitalism. We found the magic bullet. You know what it is? Loans. And yeah, you have to pay them back. But if we just keep the interest rates at zero, then you could just borrow new money and just print and print and print money, and there's no tomorrow, and we sorted it out. And obviously that's not how it's ended, because we sit today with a world economy which has a total debt of around $350 trillion, which is 3.5 times the total world GDP, and enormous debt filling up the public sectors of every single country in the world. The United States has a debt of $35 trillion. And this is we're talking about a world economy. Trump is carrying these things out. Okay, the trade war is beginning. This is happening at the situation where the world economy is already very, very weak, is performing extremely weak. America, with its 2.5% is being hailed as 2.5% growth, is being hailed as an economic marvel, almost economic miracle, almost.
Yeah.
And Europe, Britain is in recession. Germany in and out of recession. France, the whole of the EU flatlined, basically. And you have on top of this rising inflation, which has been, it's now come down a little bit, but it's still there. Rising interest rates, and this mountain of debt that they've been piling up, that they're like there's no tomorrow, is now becoming a serious problem. The OECD has written a debt report recently, which talks about 2024, that governments and companies borrowed $25 trillion globally from the markets. That is 25% of GDP, a bit less than 25% of GDP. They borrowed in 1 year of world GDP. They borrowed in 1 year alone. That's triple the amount of 2007. Let me just say, yes, the inflation initially reduced the debt to GDP levels, but what we see is now every year, debt to GDP levels continue going up. In OECD countries, which are the most advanced countries in the world, the aggregate debt to GDP rose from 82 to 84% in 1 year, by $55 trillion, right? This figure is projected to grow further 85 in 2025, and more than 10 percentage points higher than in 2019, and nearly doubled the 2007 levels. 2007, by the way, was already 7 or 8 years of deficit financing and borrowing and all of these things.
2 decades even.
Yeah. Yes. Anyway, you have this huge mountain of debt, not just in the advanced capitalist countries, also borrowing from markets also emerging markets have gone up sharply. Bond issuance rose from around 1 trillion in 2007 to over 3 trillion in 2024. Outstanding debt levels in emerging markets are nearly 12 trillion in 2024, up from 4 trillion in 2007. So a tripling of government debts in emerging countries, i.e., less advanced countries. Now, up until now, they could survive this more or less. They could carry it. They could kind of manage it. We've still seen 15 years of austerity. We've still seen 15 years of attacks against living standards, cuts in public services, especially in Europe, where the working class was used to a relatively high level of living standard compared to the rest of the world. That's been the past 15 years. Cuts, austerity, every single year, cuts and austerity. However, now we see that interest rates are rising, and interest rates payments are now becoming a huge part of government public spending, basically. It says here, the government interest rate payment to GDP ratios increased in about 2/3 of OECD countries in 2024, reaching 3.3% on aggregate, an increase of 0.3 percentage point since the year before. So we're talking 0.3% of GDP, they spent more in 2024 than the year before, just on interest rates, interest payments, not debt payments, only on the interest payments. This means that interest payments is greater than government expenditure on defense in the whole of the OECD. And defense, obviously, is often the most or the second most expensive or third most expensive part of the budget. We're talking about interest rate payments, which amount to levels comparable to whole departments like the Department of Education, or
something like a tenth of the whole government budget.
In Britain, is a tenth of the whole, because 3.3% is according to GDP. It's not the government budget.
Yeah, but I mean, it's like between the 1/20th and 1/10th of the whole government budget, and it's rising.
Exactly. And then you have on top of that, you have a debt bomb in the corporate world. A huge amount of, similar amount as in public debt is in the corporate world. Where at one point, even companies who had lots of money would just take up billions and trillions of dollars of debt that they would spend on buying new companies or paying out, because it was, you made money. Interest rates, in fact, were negative at one point. So you were making money out of borrowing money. You were actually getting more money out of borrowing. It would be stupid not to borrow if you had if you were a big company. However, the report writes, while from 2009 to 2023, non-financial companies had 12.9 trillion higher bond issuance, i.e. they took up loans and bonds $12.9 trillion more over the course of these 14 years. Meanwhile, corporate investment was 8.4 trillion lower. So you actually have a situation where loans and debts are rising, companies are taking up more debts and investing less. And then it says, meanwhile, corporate investment, rather than productive investment, much debt in recent years has instead been used to fund financial operations like refinancings and shareholder payouts.
Yeah.
As we explained, you have a situation in the West, in particular, probably in many places, that it was, many companies lived off of these cheap debts. We have a whole 20% of the companies are said to be zombie companies in the West. thousands of companies who can't even, who are not profitable unless they get these cheap loans and they get them year after year after year.
There some big companies are companies that don't earn enough to pay back the interest.
Exactly.
They can't even pay off the interest with their profits.
Yes. And meanwhile, all of this was supposed to impel investments, development. None of that was done. It was all just gobbled up one way or another by the bourgeois. So this is a situation that we are entering the world in, this period in, this trade war, a situation where every government is sitting on a mountain of debt. All companies are sitting on a mountain of debt. I haven't even gone into to ordinary people. Private debt levels are huge because in the West in particular, I mean, the mortgage market and the loans and so on that people get, huge amount of people who are even insolvent. If they had to, they couldn't, without cheap loans, they couldn't even.
It depends on where you are, but in a lot of countries now, the debt levels of private is like as much as 100% as well.
Exactly.
So you can have government debt of like 80. Often it's the case that it's one or the other, as in you have a really high corporate debt, a really high government debt, a really high private debt.
Yeah.
And then in total, it makes up 300%. But like the distribution between those three is like slightly different in different countries. But the point being this massive indebtedness, which is in itself is like a consequence of the crisis of overproduction.
Yeah.
That's, governments are stepping in. Well, private people, they have to borrow in order to consume. So in order to keep the wheels of the economy going, workers have to borrow in order to buy back the products that are being produced, the products that they themselves produce. They have to borrow in order to buy them. But then also governments, in order to try to keep the wheels turning, when the workers even don't have enough money, can't even borrow enough money. So up until 2007, it was relatively easy to borrow. After 2008, right, this workers couldn't borrow as much anymore. Household debts didn't rise as much anymore, or very little, in the US in particular. They even went down a little bit. Because the banks wouldn't lend to workers because the workers were going bankrupt. But then the government steps in.
Yeah.
So the government starts borrowing lots of money in order to keep the wheels of the economy going.
Yeah.
Right? By giving handouts maybe, or by investing in one way or another, or by increasing public investment in public expenditure, or now like they're spending on arms or whatever. Like it's try to keep part of the reason why Germans want to spend on arms is, sure, they want the weapons, but they also want to keep the wheels of the economy going, right?
Yes.
So US, right? US has a 3% growth rate, 5 of GDP, 5 to 6% of deficit. So GDP, 5%. So it means that basically, if you cut away the deficit, right, let's be generous. The whole of the US growth rate would be gone, or there would even be in a recession if it wasn't for the fact that the state is basically propping up the US economy in this way. Has all these consequences when it comes to the trade deficit and so on, which Trump don't like to talk about. But that's effectively the fact. Like the US economy is being propped up by the state. And it's not just the US, it's the same in Europe and so on. All these deficits, which are high in France, they're now getting higher in Germany. In a lot of European countries, they reach such a point that they can't really bring them higher anymore because the level of debt is like over 100%.
Yeah.
Japan has a massive state debt and the deficit, and they're trying to, which has been building up over decades, because the attempt of the state to try to get the economy going again. And so the whole economy has become more and more addicted to this debt.
They thought they solved the problem of capitalism. They found the magic solution, just debts. And I think a lot of people in history
Well, it's the tweaking of the interest rate, which is their magic solution, right? They were like, but the central bank would step in, and this was the monetarist idea. Control the monetary supply.
Yeah.
The central bank steps in, raises or lower, like a fine-tuned mechanism. They could just raise and lower depending on the situation. And now Jerome Powell is sitting there and he's like, what am I going to do? We've got inflation and recession on the cards. What am I going to do? I'm going to increase the interest rate, or I'm going to lower the interest rates. Either way, I'm going to create massive problems. Yeah. And this is they thought that this interest rate instrument, and then they had quantitative easing, which is like an extension of that.
Yeah.
Just making more and more debt, money. Right?
Yeah.
It's more and more debt. Yeah. Printing of debt, And yeah, they thought basically they can rebalance the economy with that measure, but it doesn't work because the debts were never paid back.
Yeah.
If it was a healthy economy, over time the debts would have be paid back. You would accumulate debt, and then the debts would be paid back because the workers would get more wages, the state was getting in more income, and so on. The debt would be paid back.
Yeah.
The problem was that never happened. So yeah, maybe it stopped increasing so much in them for a while, but then every time they just had to increase in order to keep the wheels turning.
Yeah, the whole of the big parts of the system became addicted to debt. And in fact, this probably had we can look into this in future episodes. It probably had a debilitating effect in terms of innovation, because what you had as a result of this debt was a series of bubbles in the stock market, in the property market, bitcoins, this and that, many areas where you would have to less effort, higher profit rates, quicker turnaround time than if you had to develop a whole new industry, a whole new science, a whole new technology, where you would maybe, at this level, we're talking ASML levels, you would have to invest hundreds of billions with the possibility of failure or not knowing where things were going. Obviously, as a capitalist, Marx says this at one point, the capitalism always tends toward making money out of money. Just skipping the whole of that process altogether. Yeah. And this influx of cheap credit, cheap debts accentuates that process. And it's been it's been strengthening the tendency towards lower productivity, and just keeping the system on life supply at the cost of what? At the cost of preparing an almighty crisis. They are saying that Trump is mad, but this was mad. This was the work of extremely short-sighted mad people.
Well, I mean, the whole way the system functions is mad.
That's the point.
The system
is
point. Mad.
The point is that within the system, this is an irrational system. Yeah. Capitalism is an irrational system. It functions according to its own laws, which cannot be controlled by anyone. You try to control it in one way or the other. It's like Jurassic Park, you mess with nature, and nature messes with you. You try to control one part of the system. You try to overcome the contradictions of the system without the inbuilt mechanisms of the system. What are those inbuilt mechanisms? It's crises. The reason why capitalism goes into crisis is because of the pileup of these internal contradictions, which have to be resolved one way or the other. And they try to overcome these by all of these measures that you just mentioned, at the price of piling all of the crises that would have come up all on top of each other, and then some, for what we're entering today. Now, of course, the important thing from our point of view is not so much to say, oh, this is where this economy is going, this is what that economy is going. From our point of view is, how is this going to affect working people? And I think we are going towards a very, very stormy period. We saw, let's take the UK alone. The UK economy is in recession officially. It is barely trembling along even then. Its debt levels have gone from 730 billion in 2008 to 2.8 trillion last year. And the debt to GDP has gone from 46% to 106%. This year alone, the OBR, the Office of Budget Responsibility, expects the country to spend about 105 billion in interest on debt. This is what the Financial Times says. This is well above 88 billion spent on universal credit, 37 billion spent on defense, although defense in reality is 56 billion, if I'm not mistaken. The 72 billion for investment, or even the 90 billion for education. More is spent on interest payments than on any of these departments. according to the OECD report that I read out before,
And they're
go ahead.
they're now carrying out cuts, but they're not carrying cuts to the interest rates payments, but they're carrying out cuts to all the other departments, except defense, of course.
Precisely. And of course, now they're raising defense. But just before we go to that, just to say that in the OECD, according to this OECD report, debt report, the majority of the debts that OECD countries hold are based on bonds that were bought in the previous period on the basis of low interest payments before 2019, I think it is. 45%. And now the interest rates are going up rapidly, quite rapidly. Every month they're going up a little bit, which means that every new debt is going to be significantly high. Every new refinancing, you have to pay off 50 billion pounds.
Well, your debt is coming due. You have to pay.
You have to pay it off. Most government just borrow another 50 billion to pay off the old one, and that's how they carry it onwards. But the new 50 billion is going to be on a higher, much higher interest rate. 45% of the debts of OECD is going to be renewed in the next 3 years. So that means a dramatic increase. We're already talking about 101 billion per year in Britain alone. We're going to see a dramatic increase. We don't know in 3 years where the interest rates are going to stand in the midst of an international trade war, massive wave of protectionism, increased tension between the nations. And already this year, they had a surprise. They didn't realize, but because they had to reissue bonds, they had a surprise bill of 10 billion pounds that they couldn't find anywhere. They'd done 10 billion pounds worth of cuts that they announced recently in the Rachel Reeves announced these a few weeks ago. And we're talking this kind of cuts being added every single year.
Yeah.
They're saying that interest are going to cost, this is what the Labour government's saying now. They're playing it down, obviously. They're saying another 10 billion pounds every year is going to be added to the interest rates. I think it's probably higher than that.
That's all things remaining equal, I bet.
Exactly. If everything remained exact, but we can see that every indicator is on its way down. Unemployment is going to go up because of the economic situation. Factories are going to close down. Income from business tax, all of these are going to go down. Inflation might go up. Interest rates would probably go up. So we're talking much higher levels of problems.
In particular, all of this is based on the confidence in the markets that the governments will pay back the debt.
Yes.
Or at least will fulfill their obligations at the end of the term of these.
Yeah.
Maybe, if they default, at least they won't default within the terms of the loan that you're lending them. So as markets lose confidence in the government, or if they lose confidence in the plans or the fiscal plans or the financial plans of the government, then these will go up dramatically, right?
Dramatically, yeah.
So this is what happened during Liz Truss government, for example, in Britain, which people might not remember, but she was Prime Minister for like a month and a half.
Yeah.
And she presented a budget with the idea that she's going to cut all taxes. It's not dissimilar, actually, to what what Trump's budget is like.
Yeah.
She's going to cut all taxes and finance that by borrowing extra money, right? And the markets were not impressed.
Yeah.
And basically they all pulled out, stopped lending money to the British government. The cost of borrowing shot through the roof. That caused all kinds of other secondary financial problems. But eventually it brought down that government.
Yeah.
Within the space of, I think, a few weeks, right? The government fell. And this is the kind of scenario that we're looking at. And that's why you can see the Labour government now, they're extremely nervous. Any sign that the markets might be losing faith, or the OBR produces another calculation or whatever about the future debt, and they're immediately running and presenting some more cuts, right?
Yeah.
Announcing some more cuts. Sometimes also re-announcing old cuts. Like I think they did that with the welfare bill. they're like, oh yeah, we're making all these cuts, but it's actually already announced half of them before.
Yeah.
But so this, because they're so anxious that the markets will retain their faith in them.
Yeah.
Because if they don't, then suddenly these extra 10 billion becomes 20.
Yeah.
And this is particularly problematic for these governments for sitting on this massive, and it's true of the United States as well.
Yeah.
There's some speculation that the reason why Trump changed his mind about the tariffs was because of the increased cost of borrowing for the US Treasury. I think that's a bit narrow, but nonetheless, it is a very important question because he don't wants to not cut. He doesn't want to attack welfare bill in the United States because so many Americans rely on it, and including many people who voted for him.
Yes.
So he doesn't want to attack that, but he also wants to keep the tax cut and a few more into the banks.
Yeah.
How can he do that without and still retain the confidence of the markets?
Yeah.
This is an impossible equation.
And as this happens, we see on top of that, we see geostrategic developments. America pulling out of Europe, or reducing its presence in Europe. That will reduce the general trust in the markets also in European countries, because a big part of what was underlying European capitalism was that America, Big Brother, had their hand on it. It was a guarantor, the ultimate guarantor of the main Western European countries. That's gone. You have the military bill. It's going to be added, which, in Britain, they're talking about at least 6 billion extra spent, but that's just the beginning of it. Another 3 billion they've announced indefinitely to Ukraine. Meanwhile, schools, hospitals, disability benefits, all of these are under vicious attacks. All the infrastructure is falling apart. We're not living in a first world country anymore. I think it's pretty safe to say that.
It's not easy cycling on the British roads.
Exactly. And this is a trap, because the deeper in debt they get, the more the interest rates rise, the more they have to cut, the more they're also, reducing demand. They're cutting into the economy, so to say. And this has a spiraling effect, which then reduces their own income in the end, their government, the income of the government, which then makes it harder to pay. And it's a vicious circle, which is down to, and which will lead to what? Which will lead to massive attacks on the working class. And I think that's where I kind of wanted to end this. I think at the moment, people looking on the television and they're seeing, oh, Trump is doing this tariff and that tariff. And it's almost like a weird, surreal spectacle, and people saying, oh, has the world gone mad or not? In reality, what we're seeing is a qualitative shift in the development of capitalism. It's been a long-term decline. The post-war boom peaked in the 70s, in the mid-70s, and since then it's been a decline. But this decline has several phases. And the one that we're entering now is one massively accelerated from the previous one. We're talking no longer a couple of billion cuts here, a couple of billion cuts there, which was hard enough to swallow for most people. You go into the public sector, they are bursting with anger and resentment, and under the pressure, the relentless pressure of the state. In the factories, the pressure of the bosses is relentless. That's nothing compared to what's going to come. And what we see, when we see the old world order, the liberal world order is falling apart, is collapsing. You had the military and diplomatic part of it collapsing, with America withdrawing, and we've discussed this about Ukraine and Europe. Now we have globalization, the end of globalization as we knew it. You can't really get rid of globalization altogether, but a significant decline in world trade, and a severe, blow to world trade and the world market. A blow to the productive forces, a blow to the productivity of mankind, in the output of mankind in reality, which is gonna reflect itself in a blow to the working class. Because the bill is gonna have to be paid by someone.
Yeah.
And the ruling class will pass on this bill to the workers. Look, they're not willing to let go of their military expenditure. They're not willing to let go of their imperialist ambitions, although they might have to.
I think some countries, they are now looking at these military expenditures being demanded of them.
Yeah.
Itally, Spain,
Yeah.
France, even to some extent.
We'll see.
And they were like, when they were asked to, oh yeah, you got to raise your expenditure. I mean, Germany, they still got that. They only had like 60% of debt.
Yeah.
So they can borrow some money. They just have some room. But Italy, France, Spain, they have over 100%. And so when they were asked to, well, they got a choice, right? Do they engage in a savage attack on on the working class in order to fund this military expenditure? Or do they try to borrow it? But no one wants to lend to these governments. They already have large-ish deficits, and they got really large debts.
Yeah.
And so they're like sitting down, and so Germany has announced their military expenditure, but where are the rest? They haven't announced anything.
Yeah.
And so I think they're balking at it, and they're looking at the situation. They're looking, if we do this, like we already have problems with workers, they're already restive, they're already, we already see them with discontent there. And they're seeing, if we do this, if we try to implement this program, which is demanded of us by Trump and by the EU, like von der Leyen was saying, you have to spend so much on military, and Rutte, the NATO General Secretary, they're all saying you have to spend so much money. If we do this, we're going to create a mass movement in our countries, right? And which we will not be able to control very easily.
Yeah. Well, the fact is that whether the military spending seemed to be a massive blow. It will be a massive blow if they raise it to living standards. They will have to find the money in cuts.
That's the truth. They can't borrow it.
But the fact is that even without the military spending, the price of the crisis is going to be job losses in the hundreds, in the millions, in the tens of millions, in the hundreds of millions, maybe all around the world. Rising prices and rising interest rates that will make a lot of working class people bankrupt who own their houses, will make a lot of companies bankrupt. They're talking about zombie companies in the major economies with 140 million workers, right? 140 million workers would be unemployed if interest rates went up significantly. We're talking public budgets which are under massive attack. So we are talking about an end of the whole of the exceptional period of post-war period, where in Europe the capitalist class could afford some civilized, a certain level of civilized living for its working class. That's finished.
Yeah.
And what we're going to go back is a situation closer to before World War II. A far more divided and intense class society, and a far more intense class struggle, where the working class again and again will be attacked, and through this will be forced to move. And the question will be faced by it. What kind of society do we want? And I think that's what this situation shows, because this Larry Ellis article that we started with, I just want to read the ending of it. This is a very interesting article. It says, as Joe Biden discovered, the willingness of the American public to tolerate economic pain is limited, i.e. the previous period didn't work. Trump's tariffs are a sign of weakness, not strength, a fear in Washington that the days of U.S. imperial glory are coming to an end. If that is the case, the U.S. is going to need all the friends it can get, which makes Trump's indiscriminate use of tariffs even more of a risk. All that said, Trump's tariffs are a response to a policy vacuum that would once have been filled by the parties of the left. The failings of the hyper-liberal model, slow growth, rising inequality, the hollowing out of manufacturing, have been evidenced since Bruce Springsteen sang his laments to lost Rust Belt communities in the early 1980s. The left has proved not just incapable, but also unwilling to construct a social democratic response to these failings, preferring instead to fall back on the idea that the global free market was a force of nature that could not and should not be interfered with. If right-wing populism is on the march, then that's because when the call for help came out from the communities that felt abandoned, the left was nowhere to be found.
Yeah.
What do you think of this, Nico?
Well, I think, what can you say? He's completely correct in his criticism. Like, look at what, I mean, just look at what the main social democratic parties are doing. Keir Starmer, what's his name again? Scholz in Germany, the policy he was carrying out in Germany. The Sanchez in Spain and so on. You look at all, or if you want to be a bit more generous, what do you say, with the interpretation of the word left and included the Democrats in the United States, which I suspect Larry Ellis does. Maybe. I wouldn't call them left or a working class party, but I suspect Larry Ellis does. Elliot, sorry. But I mean, what do? They're carrying out austerity attacks and so on, right? That's what they've been doing. I would say if you think then more like the left reformists or the left wing of the labor movement, if you say what they've been putting forward, and I think Larry Elliott is one of those. And what he's saying is, we would basically what we need to. And he is kind of ironically on a similar, well, not ironically, but he is on a similar page to Trump in a way. Because he wants to like turn the clock back to the 1950s, 60s, when capitalism could afford reforms and so on. Yeah. That is his program. That was also the program to a large extent of Corbyn. And you can see in various ways this is what the left of the labor movement have been able to produce, right? Then you have other people, I don't know, Sean Fein as well is a little bit on the same track, right? Yeah. He's like, we want to come back and we'll rebuild the Rust Belt and rebuild American industry and so on. Obviously, with the idea being that this would produce kind of living conditions like the American dream, when you could afford your house and so on with your wage and you didn't have to borrow all this money and so on. And you got a decent job with decent working conditions, or that the idea being that these tariffs somehow would create these conditions. But this is impossible. You can't just turn the clock back, and that's true for. And really, it's like it's the abandonment of the left. I mean, this is where Elliot, he doesn't really go far enough, really. He doesn't actually, if you read this article, also present an alternative.
No, he just says there's no alternative.
He just says the left hasn't presented an alternative. Yeah, correct. But he doesn't actually give one himself. Yeah. But really, you cannot solve this problem with capitalism. And this is where all of these people, they fall flat on their face, whether they be Keir Starmer or Jeremy Corbyn or Sanchez or Larry Elliott or Bernie Sanders. They're trying to resolve the problems of capitalism within the frameworks of capitalism, right? Yes. The problems of capitalism creates, but they cannot be solved under capitalism. That's where they then fall. Basically, they come up against this barrier, right? What are we going to do if we have to navigate within the framework of capitalism, right? With the massive state debt, right? So they're like, well, we want to spend money, right? But there's this massive state debt. Then what do we do? And then the only thing they can come up with is like printing money as a solution to the problem. They don't really have a solution because they're all basing themselves on the conditions that exist today, on the basis that capitalism has to be maintained in one way or another. Yeah. So either they then go down like the sort of Trumpian protectionist route, which is no solution at all, because it means, I mean, basically what Trump's policies raises is the prospect of mass unemployment again, like in the 1930s, right? Of raising unemployment level, like we saw in Greece as well. There wasn't protectionism that caused that, but these kind of mass unemployment where 20% of the working population is unemployed. This is the prospect that's now before us, and this is would be the consequence of protectionism, which Trump calls a little pain, in order to bring the wealth back. There's going to be a lot of pain and no wealth being brought back. And so as long as you try to solve this problem under capitalism, you're going to get nowhere. And it goes for the trade union league as well, like Sean Fein. He was trying to he's trying to come up with a political program for American workers within the framework of capitalism, but there is none. And it's like the left has completely abandoned socialism, the struggle against capitalism, the struggle for anti-capitalism, the struggle for socialism. And the consequences there becomes precisely what Elliot calls a policy vacuum, which is a stupid way of saying we don't have any ideas.
Yeah, the left has been abysmal in its performance in the past period. He says, and he's right, actually. He says there is a vacuum all of this, in fact, the left bought into the idea of the liberal world order. As you say, they didn't have a challenge to the system. They just wanted to tweak it a little bit. But in reality, they entirely bought into it. And now a lot of them are running around defending it against the so-called dictator Trump or what it is. The point is this. Capitalism itself as a system has reached dead end. The crisis that was prepared by the whole of the previous period and overseen by the Bidens, the Obamas, and all the Bushes and Clintons and so on, that was not there. I mean, they were acting in whatever they thought, but that crisis was prepared due to the underlying contradictions of the system itself. Now, they've exacerbated those contradictions by the way that they've acted. But nevertheless, those contradictions were there. Trump is not going to change that. There's no solution within these. In fact, what we see is it is globalization itself transitioning into protectionism and Trump merely being the guy pushing the button. Why? Because within the framework of capitalism, i.e. with private property over the means of production and the nation state, there's a limit to they are a break and a limit to the development of the productive forces. This is what we can see. You have all of these immense developments. Robotics, imagine humanoid robots. In 10 years, and you can have billions of humanoid robots going around factories and in roads and in shops doing all sorts of work. This could free up humanity. This could free up our time to develop whatever we want. Lower working hours dramatically, raise living standards, produce enough for all of the basic needs of humanity to be met, and then some. But what does it lead to? It leads to a massive trade war. It leads to contradictions, clashes between the capitalist classes of the different capitalist nations. It leads to the destruction of the productive forces, the destructions of all of these immense achievements of humanity. Why? For the benefit, so that a tiny, tiny clique at the top of the world economy, each one of them maybe in their own little countries, can benefit. That to suit their individual narrow interests, they're willing to drag the whole of humanity and the whole of the world down with them. And that really shows the way forward for what is the task of the next period. We're going to see class struggle on an unseen before scale. If we thought the past 15 years of dozens and dozens of revolutions and revolutionary movements all over the world was something, the next period is going to be far more intense than that. And as a consequence, the working class will be faced with the choice to take power into its own hand, to take all of these products of their own labor, these immense machines and technologies into their own hand, and to develop them on the basis of the needs of the whole of humanity, i.e. expropriate the capitalist class, expropriate the tiny group of parasites who own the productive forces, who own the commanding heights of the industries, nationalize these under workers' control and management, and use the resources and the proceeds from these to develop society. And on that basis, you can develop a world market on a much, much higher level. And all of these things that we talked about will actually just be the footnotes, the little slight anticipations of what can actually be achieved if you actually establish a world market, a world cooperative, you can say, of working classes, of the world working class, working jointly to build the society of the future on the basis of high-tech industry, automation, and of course in harmony with the environment and with the needs of all the workers in the world. I don't know if I just ended the show there. You had a quote. I think you should read that.
Okay. So when Trotsky, when he's talking about tariffs in the 1930s, he did explain, like, and again, he was saying, you're not going to find a solution on either side of this, right? Either by trying to turn the clock back to the era of free trade or tariffs, right? Neither of these are going to solve the problem. And what he said was, he says, he talks about the capitalism and how it feels, how it goes about getting out of a crisis. It says, therefore, to save society, it is not necessary either to check the development of technique, to shut down factories, to award premiums to farmers for sabotaging agriculture, to turn a third of the workers into paupers, or to call upon maniacs to be dictators. Not one of these measures, which are a shocking mockery of the interest of society, are necessary. Bear in mind, this was writing in the end of the 30s, right? So we're talking about Hitler and Mussolini. What is indispensable and urgent is to separate the means of production from their present parasitic owners and to organize society in accordance with a rational plan. Then it would be at once be possible really to cure society of its ills. All those able to work would find a job. The work they would gradually decrease. The wants of all members of society would secure increasing satisfaction. The words property, crisis, exploitation would drop out of circulation. Mankind would at last cross the threshold into true humanity. And that, I think, is a very beautiful, like, quite poetic way of basically putting the task that lies before us. It's not either of these sides, but actually for the workers to take power into their hands and to take the economy into their hands and run it in the interest of everyone in the world, and then liberate us from all these problems that capitalism has created.
I think that is those are very true words, obviously, and that's a perfect way to end today's show. It was a long show, almost 2 hours, longest show we've ever done, but it's partially justified because Against the Stream will be holding a 1 week break, so we will not be airing next week, but we will be back again the following Thursday, 6:30 p.m. London time, as per usual. Until then, I wish you all a happy Easter, happy viewing and watching, listening and watching this episode. Please don't forget to like and subscribe to our channels. Do write your comments and questions in the comment sections. We do read them, and we do try to take the questions that arise there and the comments that arise there into consideration when we do these shows. So please don't hold back. And it also does help us get the show out there and help us with the algorithms. Thank you so much, and we'll see you next time.